You are listening to chartingwealth.com for Wednesday, the 13th of December, 2017. We see for the day, the S&P 500 up 0.18%, the Qs down 0.13%, TLT, that is a 20-year bonds, down 0.04%, just barely, and gold up 0.12%. Again, no strong movements throughout the course of the day, but let's jump in and see how this week is developing. On the weekly chart, we'll first head, as we always do, to the S&P 500. We see a fourth week after a little bit of a pullback on the week ending the 17th of November. We see going into the fourth week of strong up movement. What we see happening so far, and it's only the second day of the 5-day, the weekly candle, we do see derivative oscillator gaining energy, and we see the price percent oscillator moving up at the same angle it had been over the course of the prior week. Still, movement is well above the weekly trend line. As we look at the 2-day chart, what do we see? We see that movement's still above the 2-day trend line, and the price percent oscillator moving up quite nice along with the derivative oscillator. So things are looking nice on that movement on the S&P 500. Remember the crossover that we had on the 4-hour chart in the afternoon? Were you able to jump in the morning or at around 10:30, or in the afternoon at the opening, somewhere around about 266.27. High was 267.32. Again, we had that crossover in the afternoon, which makes it sort of difficult. It's nice when those crossovers occur in the morning because, of course, you can jump in the following afternoon. Getting in the morning is a little bit harder. And again, if you want to get in the morning, whenever there's a 4-hour crossover, you can either wait till the end of the morning, that is when the noon candle, that first 4-hour candle is drawn, or you can check out and look at things on the 4-hour chart and also around 10:30. That's after idiot hour ends. Remember, the first hour is typically where folks are getting hammered because the market makers are given a lot of control. You never, ever buy at the market. You always set a limit order. So that's the way to do it. And again, waiting for that first hour where the market makers are in so much control and a lot of crazy things are happening once the market settles out around 10:30. That's when you look at potentially jumping in, or again, when that candle closes at the end of that first 4-hour period at noon. Okay, now let's go back to our weekly chart. And we will go to Q. What is that? The NASDAQ 100. After 2 weeks of sideways sliding and trending down movement, what have we seen happen on the weekly chart? Well, the derivative oscillator is continuing to lose energy, and the price percent oscillator is moving closer and closer to a crossover going down. We actually thought that might happen sometime during last week, that is the week ending Friday the 8th of December. Did not happen. Looks like it's getting closer this week, even though we have a green up candle. Again, we use the Heikin Ashi candlesticks, means average pace in Japanese. Want to know more about it? Great training at the website, chartingwealth.com, under trainings. Please, that's probably the best training we've done, the Heikin Ashi training. We love Heikin Ashi candlesticks. Much easier to read. What do we see going on the rest of the chart? Well, we see derivative oscillator losing energy, price percent oscillator moving down, price movement up some. Of course, we are below the weekly trend line after we had that break over the prior 2 weeks. What do we see going on the 2-day chart? We see actually the first day of the latest 2-day candle up, the prior 2-day candle up. Although the 2-day candle, remember, rotated over going down back on the 1st of December and still hasn't rotated back over going up. Derivative oscillator still in the negative along with the price percent oscillator. What's going on that 4-hour chart? It did cross over back on the morning of Friday the 8th. And again, a little bit of a pullback Friday afternoon, up on Monday, up in the morning on Tuesday, little down in the afternoon. So the 4-hour chart's positive, the 2-day chart negative, the weekly chart barely positive. So we'll continue to keep an eye. You can expect if this thing rolls over and the 4-hour chart starts going down again, probably is going to pull that weekly with it since the 2 days already in a down move. So just keep your eye on the cues. We don't have a trade there right now. Okay, now let's keep moving along. On the weekly chart, we go to 20-year bonds. Remember, we had the weekly vertical crossover going up on the week ending the 1st of December. That following week, the week ending the 8th of December, we had a nice up week. So far, we have a red spinning top. That means indecision, trending down just barely for the day, 0.04%. Price percent oscillator sliding sideways, derivative oscillator continuing to gain energy. As we focus in a little more on the 2-day action, we see that we have one 2-day candle spinning top. It's a red spinning top, indecision, trending down. And of course, the first day of the latest 2-day candle is a rotation over on the derivative oscillator into the negative, and that price percent oscillator appears to be headed toward a crossing. Now, it could bounce back off that and not cross over going down, but it has pierced. So far, the first day of the latest 2-day candle has pierced both the weekly and the 2-day trend line. Not a positive move there. What do we see on the 4-hour chart? We see over the course of the day on Tuesday, down move in the morning, a little bit of a recovery in the afternoon, again, barely down 0.04%. But again, continue to watch when you blow through your trend lines and your 2 days getting close to crossing over, going down. You got to be concerned. Of course, we warned you about staying in that trade the way that it was heading. Now, you can always wait. The 4-hour chart crosses back over going up, and the 2-day and the weekly are still in confirmed up moves. You can jump back in, but you don't want to stay there and just ride this down. Don't want to do that. Okay, lastly, we will go to gold. And gold is up a little bit for the day, 0.12%. But you look at the weekly charts, the week ending the prior week, down hard the week ending the 8th of December. Down movement strong so far over the course of the week. Also strong down. That price percent oscillator continuing strong down. Derivative oscillator also heating up with downward momentum. Price movement well below the weekly trend line, which we probably need to actually redraw again, since it's hard to really use it much since we had some up movement in prior weeks. But again, price movement well below the weekly trend line. We go to the 2-day trend line. What do we see? Well, we can also redraw that trend line a little bit also to make it a little more accurate and helpful to us. But again, price movement strong down there, and we can connect 3 candles, which is always nice, the way we like to draw trend lines. Don't forget, we have a great training on trend lines. It's actually chapter number 6 of our book. And I encourage you to go to the website under trainings and listen to that. We'll be putting out chapter 7 soon. Keep you posted. If you're a subscriber, you'll, of course, get it first. Now, what do we see going on? Well, we had crossover on the 2-day chart back on the 5th. We have so far 4.5, because it's just the first day of the latest 2-day candle. Of course, 4.5 2-day candles representing 9 days of strong down movement in gold, derivative oscillator, price percent oscillator. So a lot of strong movement down in gold. What do we see on that 4-hour chart? Well, did start working again, as we've talked about, all the way back on the afternoon of the 29th, Wednesday the 29th of November. Strong down movement keeps trending. Tell you to keep your eye on the prize there. We did blow through the 118 mark, which was nice, and just continue to watch. We see that the price percent oscillator has not only flattened out, but is moving up toward the red signal line, and the derivative oscillator has lost a significant amount of energy. So watch, there may be a crossover coming up, or it could just be, digesting some of the downward momentum and get ready to cross back over, or just keep, rather, going down. So keep your eye on the prize. And again, we'll just continue to monitor gold and see how long this 4-hour chart works. Remember, our concerns are the closer we get to the 15th of December, the more likely it is that that 4-hour chart will stop working, but started working again recently. And again, long as charts work, we use them. Folks, that's where we are as we end the day on Tuesday as we go into Wednesday, the 13th of December. We so appreciate you being with us. You have questions, problems, concerns, let us hear from you. cw@chartingwealth.com is our email address. You can always email us directly from the website too. We love to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube. Please do be sure to subscribe to our YouTube channel. We so appreciate it. We upload all that we do, of course, there, iTunes, all across the board. Thank you so much, my friends. Let us hear from you. We are here to help. We want to see you succeed and become a charting master, because when you do, my friends, the world is your oyster. It's like you are then in control of your financial destiny if you can read these stock charts. And you can do it, but it takes 10 minutes a day. Every day the market's open, filling out that daily market worksheet 4 times a week, the weekly market worksheet once a week, and that trade worksheet when you are doing practice trades, and you need to do those all the time. 10 minutes a day is all it takes, folks, but you got to do it every day. Perseverance, one of the most lacking of human traits, but one of the most valuable. We're here for you. And again, you want all that we have, go to the website, Charting Wealth, subscribe to the Daily Market Review. God bless from the whole team here at Charting Wealth World Headquarters.